124. Which two of the following events which occur after the reporting date of a company but before the financial statements are authorized? Okay. After the reporting date, before the financial statements are authorized to authorized for issue. Between these two dates, between these two dates, these events are happening. After the reporting date and before the financial in between these events are happening. Huh. So which two of the following events which occur after the reporting date and before the financial statements are authorized for issue are classified as adjusting events? Okay. So we need to classify or identify the adjusting events. That is the question actually. In accordance with IAS 10, events after the reporting period. All right. All right. IAS 10, events after the reporting period. By now we have remembered few standards now, like IAS 16 related to lease, and now IAS 10 relates to events after the reporting period. All right. A change in tax rate announced after the reporting date but affecting the current tax liability. It should be recorded. I think it is an adjusting event. First is an adjusting event because what it's saying is there is a change in tax rate, okay, and it impacts current tax liability. So current tax liability means the liability is existing on this date. There is a tax rate change, so it needs to be adjusted. So I think first one is an adjusting event. Second, the discovery of a fraud which had occurred during the year. So, hmm, discovery of a fraud. I will come back to this in a moment. Let's see, look at the third. The determination of the sale proceeds of an item of plant sold before the year end. So you get, sale proceeds for an item or plant for an item of plant sold before the year. So I think it was sold before the year. It is also an adjusting event because you know it happened during the year. Hmm. It happened during the year, before the year. I mean during the year. Sold before the year end. Okay. I mean during the year. Sold during the year. We can say no. During the year, we can say that sales proceeds for an item sold during the year. So it is an adjusting event because it happened. Then the destruction of a factory. So this destruction happened. Okay. After, so maybe a disclosure is required, but it is not. So destruction by fire. It is not an adjusting event. Disclosure may be required because financial statements are not get authorized for issue. But this event has happened after the reporting date, so it is not an adjusting event. But if sales proceeds for an item sold during the year, it is an adjusting event because if we didn't know the sale proceeds and the sales happened during the year, it needs to be reflected on the financial statements. Discovery of a fraud which had occurred during the year. So a fraud has, we discovered a fraud, but it doesn't talk about any, amount as such, or like a fraud has happened during the year. I think this is an adjusting event and not the tax rate change because it happened after the reporting date, and even if it's impact the current tax liability, it's an event. I mean the rate changed after the reporting date. So let's check the answers whether it is right or not.